On to our next session. Thank you, Ronak, for that. I'd love to now introduce Thomas Emanuel. Thomas is STR, and he's going to walk us through the performance metrics in the market. Good morning, Thomas.
Good morning, Matt. Can you hear me okay?
We've got you.
Perfect. So I am now going to try and share my screen. Can you all, hopefully you will be able to, I'll just put it on full screen mode. There we go. Excellent. So thank you very much indeed, Matt, for the introduction, and thank you very much for allowing me to speak to you all today. Such a pity we can't obviously be there in person, but delighted, of course, to be participating today. And this will be our agenda for the next 15 minutes or so. So I'll first of all look at global restrictions and the hotel opening situation that we see across the world. And then we'll look at hotel performance and compare Africa and see how that is doing. We'll then change tact a little bit, move away from COVID for a few slides anyway, and talk about how big the African market is, which I think is always something that is very interesting before we do look at some COVID-related data. And then I'll finish off with a quick dive into the two cities we should, of course, all have been enjoying in person this year, Abidjan and Nairobi, before a quick conclusion. So just to mention, STR, we don't discuss prices. We won't suggest what you are going to do. We'll simply report on what has happened. So I want to firstly go back to the middle of May. And you can see here from our global map the position that various countries were in at the middle of May in terms of lockdown enforcements. And you can see a lot of countries across the world had enforced hotel closures. Some in orange were allowing hotels to open, but it was really only China that was seeing any domestic leisure business at all. And across Africa, you can see there are a lot of enforced closures, as well as a fair number, particularly across Western Africa, of countries where hotels were allowed to open. If we then just fast forward slightly to the 31st of May, so the end of the month, you can see there more hotels allowed to open in more countries, some more domestic leisure business returning, China ahead of the pack as you'd expect, with some corporate demand returning as well. And moving forward to just the week before last, you can see here again, the picture's gradually getting better, more and more restrictions being lifted, including across Africa. You can see there both China and New Zealand having some domestic corporate demand, and more countries again having some leisure demand returning. But ultimately, across Africa, as across the rest of the world, hotel closures are something that we've had to see, and we've seen on a scale that certainly has never been seen before. And if we look then at the height of the pandemic, we look at April, and you can see the percentage of participating hotels from STR that are closed. Now, admittedly, we don't collect data on the whole of the market, but it is a very good proxy for total supply. So looking at this, April, Southern Africa, 70% of participating hotels closed, Northern Africa just under half. So you can see Africa, Central South America, Europe, far more hotels were closed across those regions than across the rest of the world. And if we move forward now to June, which is the latest full month for which we have data, of course, excuse me, and we can see that there's still a large number of hotels closed in Southern Africa at 63%. The numbers drop down a fair bit in Northern Africa, but still Africa far more impacted by the number of closures than we see across many other regions. So with that as our backdrop, I want to now look at performance data. And the first thing I'm going to ask you to do is look into the occupancy eyeballs. They're very insightful, actually. And what we've got here is rolling 7. So the week up until the date you see at the top of each eyeball. And they're roughly spaced about a month apart. And what we can see here is if we go back to April, the height of the pandemic, each dot represents a submarket that STR tracks, and the color of that dot represents the occupancy level of that submarket. So back in April, you can see there the vast majority of submarkets globally had occupancy of less than 25%. As we move forward, month upon month, we see that red center get smaller and smaller and smaller, and the green and teal outskirts of the eyeball getting larger. So that's good news, of course. More markets are starting to recover. So in terms of global hospitality, we are starting to see some green shoots across a number of markets. This data is, of course, though, only for hotels that are open and reporting data to STR. And this next slide here, this global map, shows the difference between the reporting data, which is what all of this presentation is on, but then also just touching upon what we call economic occupancy. So that's looking at full supply. So if all of the hotels were open, this is what the actual occupancy would be. So you can see there, Northern Africa, it declines from 13% to 10%. Southern Africa, it's a bigger drop down to 8%. So once again, you can see that Africa, really with Central South America, are the two continents that are performing at the moment the worst effectively in terms of performance. And just to show this in another way, what I've got here is the absolute occupancy on a 7-day rolling basis. And this is going back to the beginning of February, and we've got the China, the US, Europe, and Africa on the chart. So we can see there, China, the blue line, at a completely different place in the cycle, obviously. But ultimately, that market has seen some green shoots, as has the US, and both of those countries are performing at roughly similar levels in terms of occupancy. But then when you look at Europe and Africa, it's quite fascinating, I think, to see the impact, the decline, and then the subsequent couple of months, April, May, Europe and Africa were effectively in sync. They were performing in exactly the same way. But then we've started to see at the beginning of June some recovery, some green shoots in Europe as that line has started to increase. We haven't seen that yet in Africa. So the question, of course, is, well, why? Why have we not seen that? And I would put that down to a couple of reasons. The first thing is, as you saw on those previous global maps, the first sector that we think will recover in terms of demand is domestic leisure. And whilst, of course, there's a growing middle class in Africa, and you can point to countries such as Egypt or Morocco or South Africa, where there will be some domestic leisure business, a lot of African countries don't have a significant amount of domestic leisure. So that isn't going to fill bedrooms. Secondly, the whole travel ecosystem, as we all know, has really been shaken to its very core. And a lot of flights, airlift has been stopped. And of course, a lot of the key cities across Africa are wholly dependent on that airlift for their demand. So until the wider travel ecosystem and those airlift routes start to reopen fully, I think we're going to continue to see struggles. And of course, whilst there's still the threat of a second wave, there's still social distancing in place, the economic output, all of these factors are going to combine to make it a pretty tricky time for Africa to start to see any really good recovery, I would say, at this point. But let's now drill down and have a look at Africa in a little bit more detail. And these next few charts, if you've attended AHIF or FIHA over recent years, they might be familiar as I've presented them previously, but I do think they're important to just put into context Africa as a hotel market. And this first slide, I think this map is fantastic. It's very insightful, and it shows just how huge the continent is. The fact that you can fit the US, China, India, Japan, and most of Europe into Africa geographically. It's enormous. But then from a hotel perspective, there are only about 5,000 hotels there, which is 200 times fewer than the countries that could fit inside it. So the opportunity in Africa is huge. But we know that. If we look, though, where is the existing supply? Well, there are only 4 countries across the continent which have more than 50,000 keys in existing supply. That's Egypt, Tunisia, South Africa, and Morocco, as you would expect. And then you can see the slightly lighter shade of green, but quite a way behind in terms of supply. You've got Ghana, Nigeria, and Kenya. But I think what's also we need to take away from this map is the number of countries which have supply of less than 1,000 keys. And if you just think about that in comparison internationally anyway, to towns, cities across the Western world, less than 1,000 keys across a country, it's really quite a startling statistic. But despite that, we have seen a bit of a boom, I would say, in new supply across Africa. And again, this is a chart I put together back in 2013, was the first time I presented this, where I think we were in Nairobi that year. And you can see at that point in time, there were 18 countries across the continent which had no international branded hotels at all. If we fast forward to today, there are just 7 now. So the international groups have been on a real expansion across the African continent. But it's not just the international groups. African groups have also been growing their footprint. So there are now only 5 countries across the whole of the continent with no branded supply. If you go back, as I say, 7 years, there were 18. So we really have seen a bit of a boom. So African supply landscape has been changing. But let's now briefly look at hotel performance. And I just want to go back a little bit in time and talk about where Africa was last year. So historically, we've seen, despite that growth in supply, it's still been quite a small percentage when you look at it as a percentage of existing supply. And that was the case last year. You can see there, supply grew 1.1%, demand up 2%. So the supply-demand equilibrium was pretty good for the continent as a whole. But if we look at a longer time frame here, we can see RevPAR has been on a bit of a roller coaster. Supply has remained quite small, that growth, but then we have seen some demand fluctuations. And despite a very small RevPAR decline last year, if you look at those blue blocks, particularly 2017, 2018, 2019, this is cumulative demand growth. So year after year, we're seeing more rooms being sold in Africa. And that's been the situation certainly for the last 3 years. So going into 2020, things were looking relatively positive. And of course, we all know what has subsequently happened. So a year-to-date number is not really that valuable, I would say, at the moment, because we've had sort of 2.5 months of normal business. And since then, we've had these unprecedented circumstances. So I wanted to just bring you some data, but this is for the month of June, and this is occupancy. So you can see here across the major cities, what's driving business where occupancy looks a little stronger. And as the title says, I think oil, first and foremost. So Lagos, Accra, doing a little bit better as the oil business is helping. And also diplomacy, I've put there. As we all know, Addis Ababa, the capital diplomatically of the African continent, also performing a little bit better. But it's the leisure destinations that are really suffering. You can see that Marrakesh, just 3% occupancy, Sharm el Sheikh, 3%, kind of unthinkable for Sharm going into the height of the summer season. Seychelles, just 5%. And then you can see as well, South Africa, which, as we've heard in the press this week, has been hit by some pretty high new infection rates, unfortunately, in single digits as well. So there's no escaping. It's a pretty bleak picture. Rate-wise, again, we have seen some declines, and most of the markets that we're tracking for June anyway, average rates are way below $100. And for those of you that have seen presentations in the past, I've made a point of saying just how expensive in comparison some sub-Saharan African markets are when you compare internationally. But not at the moment. They're all way below $100. You can see there Marrakesh, Algiers, slightly higher. And then the Seychelles, of course, long-haul luxury is above. But ultimately, average rates are being impacted as well. So sadly, it's a pretty bleak picture to be bringing you. But I just want to finish off and have a look at the 2 cities that, if only we'd have been able to enjoy this year, the hospitality in Abidjan and in Nairobi. And I thought I would just do a few slides on both of those cities. And if we look at Abidjan, first of all, it was a really exciting destination, I thought, to be holding FIHA. I was very much looking forward to it. And it was a logical choice as well for FIHA, I think, because of the growth in that market. And if you look at supply over this time period, this is supply, demand, and RevPAR percentage change, calendar years 2015 through 19, and then year to date 2020 for June. And you can see just how much new supply has come into the market. And we've seen brands such as Azalai, Scene, Radisson Blu, all increasing their footprints there over recent years. And also demand. We have seen cumulative demand growth year after year. And these are pretty good numbers as well. So Abidjan was in a good place. RevPAR admittedly fairly flat, but when you've got that much new supply coming into a market, it's not surprising. And of course, then we sadly have to go into 2020 and look at that data. But I think what's interesting when you look at Abidjan is if we look at these same time periods, but look at the occupancy average rate and RevPAR, of course, occupancy and RevPAR go down steeply in 2020, but we haven't really seen that much of a decline actually in average rate in Abidjan. So hoteliers have been holding their rates fairly well. But it's when we get a look at just how difficult it's been. And just to mention as well, I think it's important to say that of reporting rooms, sorry, I should say, in Abidjan closed as a result of the pandemic. And there are some gaps in the line as a result where we didn't have sufficient data to report. But ultimately, at the beginning of April, we got down to about 5%. And although the week of the 15th of June there, you can see a bit of a spike in performance. Things have leveled off now at around 20% in Abidjan. So we aren't really seeing any strong recovery signs as of yet in the Côte d'Ivoire. Moving to Nairobi, the same slides there, and you can see we all know about supply in Nairobi. It's been growing year upon year upon year. A bit more of a roller coaster in terms of RevPAR. We know there have been challenges politically, safety-wise, as well as the supply issues. So RevPAR a bit more of a roller coaster, and again, you can see the impact of 2020. I remember last year in Addis, I commented on Nairobi and the fact that we were starting to see rates tumble a little bit as a result of that new supply. That's continued as a result of COVID. And of course, you can see there the occupancy and the RevPAR moving south as well. And if we look at daily data, once again, a lot of rooms closed, 56% of rooms closed, but again, about 5% at the beginning of April, and now it's stabilizing at around 15%. So again, not really any signs of life yet in the Kenyan capital. So pretty sobering stuff, I appreciate, but I did want to bring you a final thought about how we think things will recover. And there is a relation back to, for me anyway, personally, back to Nairobi. The first time I went to Nairobi back in 2012 for AHIF, my first night in Kenya, I went to the Carnival restaurant, which I'm sure many of you, if you've visited Kenya, is kind of a bit of a tourist hotspot, right, in Nairobi with their massive barbecue pit. So you may be wondering what I'm talking about, but we can learn something from barbecuing meat in terms of the shape of how we see the hotel recovery to take place. So I'll just explain that. On this chart, you've got the temperature of either the fat of the meat or the sponge, the meat, versus the length of time you'd have it in the barbecue, in the smoker. And a typical recovery follows the fat. So we would expect to see a sharp increase and then it recover bit by bit by bit until it sort of tails off as all that demand has returned. But what we expect at STR to happen from a recovery is what happens with the meat, with the sponge, where we'll see that initial surge of demand as markets start to open up back up, but then something of a plateau as a result of the travel ecosystem I mentioned, second wave, potentially, as well as social distancing. We expect to see that demand plateau out before hopefully we get to a point where we get a vaccine, we get treatment, and things can start to return to a little bit more normality, and we'll start to see that we'll have another sharp increase. So you can learn a bit from slow cooking meat on a barbecue in relation to hotel recovery as we see it.
Thanks.
So with that, I will say thank you very much for your time and enjoy the rest of the conference. Thanks, Matt.
Who would have guessed that recovery will be similar to cooking meat. So thank you, Thomas, and thanks for joining us today. Absolute
pleasure.
It's a bit sobering, but it's nice to see some stabilization there.